Hey, there's been a lot of talk in the news lately about the price of eggs, right? But I'll tell you, the most expensive thing I've heard in the last week was let's wait and see if rates go a little bit lower. All right. I didn't want to go too deep into technicalities here, but just wanted to do a quick public service announcement to talk a little bit about what happened at the end of last week after the announcement of the reciprocal tariffs and what that did to the mortgage market and what that did to bond prices and how the bond market sort of overreacted then and then did again today and had a major sell-off. So I've shared this chart with maybe you over the past when I explained that the green candle patterns going in an upward direction indicate that the price of mortgage bonds are going up and interest rates are coming down, which is what we want to see. And of course, the red candlestick patterns going in a downward direction represent the opposite. It means that the price of the mortgage bonds are going down and interest rates are going up. And of course, that's what we don't want to see. So last week, we had the announcement of the reciprocal tariffs that were kicked in on April 2nd. And the following day, well, April 2nd, and then the 3rd and the 4th, we had major sell-offs in the stock market. So the reason why they sold off is because there is a belief held by many that these tariffs are going to cause inflation. And with inflation, that it brings the possibility of a recession. And with that, the market sold off. So a lot of the equities market sold off and people sold stocks and they put that money into a safe haven, a safe place, which are bonds. And that could be 10-year treasury bills or it could be 30-year fixed mortgage-backed securities. And so as the stock market was selling off and that money was looking for a safe place to hide, so to speak, that money went into the bond market. And so what we saw on Thursday and Friday, and hopefully you can see my little cursor on the bottom of the screen there showing April 2nd, 3rd, 4th. What happened was there was a big run up in bond prices. And so we had a big rally in bond prices and we saw interest rates get to pretty much the best levels we've seen in about a year. And so what I do is follow up with people who had maybe purchased in the last year and are able to refinance and give them the opportunity of refinancing, doing a no-cost loan, running through the numbers and showing them how much they can save with this rate reduction without paying any closing costs because the lender credit pays for it. But all too often, the sort of human nature is to see, well, great, the rates really improve, but let's see if they get a little bit better. And so on Friday, again, we had the bond market run up to the best levels we'd seen in maybe since about September of last year, so maybe not quite a year. And then it sort of reversed at the end of the day. Well, then today, Monday, we had a major sell-off and everything that we had gained in the week leading up to the tariffs was basically lost. And so the bond market sold off. And essentially what happened was the interest rates went up about 0.3%. So the moral of the story here is, first of all, with regard to our economy, looking downrange into the summer, I think we can expect to see some more volatile days like this as the new administration is trying different things, i.e. tariffs, to whether it's to generate income or it's to encourage our neighbors to the south and the north to curtail the flow of fentanyl into the country, or it's to reshore manufacturing jobs into the United States. And whether or not people agree with those being effective or not, we're going to see, I think, a lot of ups and downs. So I think the best thing that we can do is just be prepared for that and realize that the rates aren't just going to, continue to go down in a linear direction or up, but they'll have brief windows of opportunity. And when you get these windows of opportunity, if you get a call from me or email or whoever your lender may be, and you get the chance to lock into a lower rate without paying any closing costs, it would behoove you to do so because chances are, what goes up quickly could come down quickly as well, and you could lose those gains. So the great thing about a no-cost refinance is that you lower your rate, you lower your payment, it doesn't cost you anything to do so, and then you just wait and see if the rates come down even further later. And if they do, you simply do another no-cost refinance. So that's the public service announcement that I wanted to share with everybody. And again, just to sort of warn people not to get too hopeful, optimistic, greedy, whatever you want to say about, looking for lower and lower interest rates so that you don't miss out on the opportunity to get these low rates when they do arrive, because it's hard to say how long they're going to last in the current climate, as there are so many different factors going on in the economy right now. And that is just something that we need to be aware of. So DM me if you have any questions or specific scenarios that you'd like to go over. Be happy to go over those with you, and have a great day.